Hello, traders. Welcome to another daily analysis. Today is January 31st. We are right at 9:42 p.m. Eastern Standard Time. So let's get into it. This is the last day of January, and as mentioned, time really goes fast. We've actually, finished the first month of 2017, and I still feel like we just celebrate the new year. So I guess that's just saying we have to treasure our time in this earth. Today is a quite volatile market, as many of you know. So let's get into it. The market started with quite volatility. There was nothing really going on. Even though we have the Bank of Japan monetary policy, which usually causes a bit of volatility, but that did not happen at the beginning of the Asian sessions. The market was quiet. The Bank of Japan, of course, as expected, kept their monetary policy unchanged. So everything is pretty much unchanged. They had some positive point in terms for their GDP outlook, which they raised up a little bit. But they also have, the negative point, which they still maintain that low inflation will continue for some time. They also extend their debt program to further stimulate the market for at least 1 year. So it's kind of a mix, but generally speaking, it's a very neutral reaction. Then the ECB Draghi speaks at the London session, which also didn't provide too much volatility. And the real catalyst came in when we have France and Spain released the CPI number, which was really positive than expected, and we saw Euro surge up. Then we had the net lending data, which is actually not a tier 1 data from British Pound from UK, but it came out as very negative to further boost Euro and start, selling British Pound at that moment. And then finally, at about mid session, London session, we have a series of Euro data, including core CPI, CPI, preliminary flash GDP, and unemployment rate, which were all very positive to further support Euro. New York session, the GDP from Canada was also very positive, following by a negative consumer confidence. Of course, the biggest drive, aside from the London session's positive data from Euro, was once again it was a comment from Donald Trump. So I guess we really have to get used to it. That's really a sort of catalyst nowadays for the market in a daily perspective. Because he is expected to make sort of comment every day that is kind of unpredictable. Or even if it is a predictable comment, market, at least for now, still react very volatile toward his comment, which was actually not what we expected. But that's just the nature of a market. Whenever you have sort of a new historical event, then the expectation sometimes is hard to predict. It's same as Brexit, when people were expect British pound is going to drop forever, only to see it actually recover a little bit, and only to see the fundamental data from UK had been quite positive ever since Brexit. Same thing as US election. People were expect dollar to drop significantly and market to crash, only to see not only not crash but rally up. And a lot of of course I read report. I don't know whether it's true, but a lot of great traders such as George Soros actually lost $1 billion from this kind of trade, because he was heavily short after Donald Trump got elected. He was shorting probably currency futures and stock, only to see everything rally up, become a very strong risk on sentiment at the end of 2016. Now, of course, he has a bias toward Donald Trump. He had publicly criticized him and also expressed his distaste to Donald Trump. That might be the bias for traders, but what I'm trying to say is that even a great trader like Soros, it's hard to predict this kind of reaction from the market whenever this event is very new. And that's why when you trade in the fundamental events, it's easier to trade the data, because data had been out, the data had been there for many, many years and months. So you can always look back to the historical reaction to know how people react to certain piece of fundamental data. But if it's not a data, if it's events, if it's a common election, if it's referendum, things like this, it's harder to predict. If it's terrorist attack, it's harder to predict how the crowd is going to react. So that's what we have right now. I definitely did not expect the crowd to react in such a volatile action toward Donald Trump's comment, especially those comments were nothing new, was not anything surprise. But nevertheless, as a trader, you have to adapt to the market cycle and always be quick to adapt. That's really my best strategy. So his comment definitely came out and put US dollar once again in a very negative territory. That not only that, it actually caused a lot of panic. So we saw dollar yen basically dropped, and that has been the main catalyst for the London and New York session. So that's what happened in sentiment. Sentimentally speaking, the oil market went up, went down, went up a little bit. It's just in the range area. But Canadian dollar definitely is very strong right now due to the weakness of US dollar. I'll go over with each currency later on. But basically, that's what we have right now. The equity market will close. Everything was closed red today in both European market, and the gold is up about $12, quite significant. US yield is also down. So it's a very congruent picture to show you a risk of sentiment that the market is really volatile. It's very vulnerable, and this vulnerability and volatility all came from Donald Trump's sentiment. So that will be the main drive. Now tomorrow we have an even bigger catalyst, which is the Federal Reserve FOMC meeting. Now it's going to be very interesting right now because Trump has been very vocal about a lot of things. Now, he had been very vocal about Federal Reserve. So we are expected to see some sort of conflict between Donald Trump and Janet Yellen because Federal Reserve is expected to hike interest rate, is expected to maybe make the US dollar even more expensive, basically. And that's completely against the White House policy right now, that they actually want to devalue the US dollar because he's very big on making the trade work, right? Ever since he got elected, all the talks is really about trade. Trade with Mexico, trade with Canada, trade with China, Japan, Europe, and Britain. So if the US dollar becomes stronger, it will be a very huge roadblock for his policy. So he has to do a lot of things to devalue it, and that against basically the stance of Federal Reserve, which they are expected to raise the rate 2 to 3 times this year. So then it will become a sort of political conflict between the independence of Federal Reserve and Donald Trump. And I do expect he to make more comments about that, which might even cause more volatility to come. So that's what happened right now. My view for the market, for Euro, the promising European data this year has continued to support Euro. Now, on top of that, right now the US dollar is very negative due to the sentiment from Donald Trump. And if back then we say Euro has suffered fundamental weakness from ECB's easing policy. That is true. And Euro also have the uncertainty for the European election. That's also true. But now if you compare this kind of uncertainty between Eurozone and US, it starts to show that Euro is actually more stable in terms of the economic outlook, and even though they have the major election, it's even more stable than the uncertainty from Donald Trump's comment and policy. So what happened to Euro right now is that ECB is still gonna keep interest rate low, but right now the continuous promising data will basically show ECB that yes, they will have to start tapering soon, and they will have to basically either follow their schedule or remove the bond buying as soon as possible. That's more foreseeable. And then for the election, yes, you have major election from Germany, France, and Holland. But for Germany and France, it's only going to come in April and September. So the uncertainty now it's become less uncertainty. As I mentioned before, same thing as British pound. And that put Euro in a very positive area right now. Because now the fundamental data is looking very promising. Now the sentimental uncertainty becomes less uncertain. That put euro become a very attractive currency to buy right now. On the other hand, for US dollar, previously we have a very strong fundamental certainty and a neutral sentimental stance. Right now, the sentiment suddenly took a large shift ever since Friday's the immigration ban basically from US till today's sort of the currency war talk from Donald Trump. Now everything become very, very uncertain, very, very sentimental for US dollar. Now on top of that, the recent data had been good, but not something that's extraordinary. So the US data has been okay. It's still positive, still supported the fundamental base, but it's not something that is a new catalyst that's going to push US dollar. So now it's starting to take a shift for US dollar right now. Now, for that being said, it does not mean we become bearish for US dollar. No, we are still bullish fundamentally for US dollar because the data is still providing a bullish stance for US dollar. However, because of the sentiment right now, I don't think, for me personally, I want to hold US dollar for any long-term trade or even mid-term trade. So right now, for me to trade US dollar will be in a more short-term perspective. You can definitely buy it against weaker currency, depend on the sentiment of the day. You can definitely short it in front of a stronger currency, depending on the sentiment. And the only thing changed is basically my time frame for holding it. Right now, if I trade anything to do with dollar, I'm really not confident to hold anything longer than a day. It's because every day, in the New York session morning, where you will always have new comments from White House, and those comments, at least for now, really going to drive the market. In which direction, we don't know. That's why we say holding a much, much shorter time frame will be my strategy for now. So I'm not saying the US dollar is negative or positive. I'm saying it does have a fundamental strength, but because of the sentiment volatility, I don't want to trade it for daily perspective anymore, at least for now. So I'm only looking to trade an intraday trade. For Canadian dollar, on the other hand, today's GDP data was that missing piece. Remember back then we said Canada has the micro fundamental strength due to the oil market. So oil market, again, is most likely going to go up at least to $60 per barrel, which is saying that the world will be very volatile. But the Canadian dollar has been a neutral currency due to its own lack of economic strength. Back then, the only good data was the labor market. But today, the GDP data has complete that picture. So right now, you have a pretty good GDP data, you have a pretty good employment data, and you have an okay inflation data. So that's really the three arrow of fundamental picture for any country. So right now, that has put Canadian dollar in a neutral to bullish currency to buy. For British pound, the parliament starts the debate for the bill for Brexit yesterday. So in these few days, the result might come out, and that will be the only catalyst. So as for now, British pound, although today the net lending had tanked, but it's really nothing. It's quite surprised because it's not a tier 1 data. So it just shows you maybe again, as I say, the fundamental picture for British pound. A lot of traders have this bias to sell British pound ever since Brexit. So that's why whenever you have a fresh reason to sell it, you will always see it drop very fast. But as for now, it climbed up very fast also because it is a neutral currency right now. There's no particular catalyst that is strong enough to either support it or short it. So the parliament debate or the result of the bill for Brexit will be the new catalyst for British pound for now. But as for now, I don't really have any direction for it. It's kind of a neutral currency. For New Zealand dollar, as mentioned, we were waiting for a strong employment data today to really complete the strong picture of New Zealand dollar. Unfortunately, that was not the case. The employment data had actually been quite negative today from New Zealand. So that, of course, painted a sort of a doom picture for New Zealand dollar. That does not mean it becomes a negative currency. It's still very strong, fundamentally speaking, because the employment rate also raised up, the unemployment rate raised up, but it's still within the range. You still have a positive GDP. You still have a positive CPI. So for New Zealand dollar is still quite strong. But right now, because the risk of sentiment, and it has been surged for a couple of weeks already. So we are not going to get in, obviously, right now. We are expecting a sort of pullback. And that's why we actually also got off from our New Zealand trade prior to the volatility today, which is very good. For Australian dollar, same thing. There's no major catalyst for now, but we just had the Chinese data came out a couple hours ago, which was also in line with expectation. So that's what happened to Australian dollar. Same thing. It's a neutral currency. It's going to react to the sentiment, and because of the risk of sentiment, of course, it's being pressured right now. For Japanese yen and Swiss franc, both are a winner for the day because of their risk, because of their safe haven currency. So that's really, for Japanese yen and Swiss franc, will actually be quite attractive to buy, because if you think Donald Trump is going to continue making a negative sentiment for US dollar, then Japanese yen will of course be a good currency to buy. Right now, people are just kind of clueless because again, it's hard to trade right now because nothing is in line. Especially if you want to trade in a more long-term perspective, nothing is in line, meaning that there's no one single currency has a complete picture. So that's the first thing I will adopt, is to really maybe now trade in a much shorter time frame in this kind of condition. Okay, so let's take a look at our trade. First thing first, I took a dollar yen trade today, and I'm at a drawdown right now. What happened is basically I got in at this area yesterday, basically in the afternoon. So I saw dollar yen drop, way below this daily PV point, with a bit consolidation here. So it was actually right here. This is where I got in. So then I think, okay, this is more like emotional movement, and I'm still have this fundamental bias toward US dollar. So I got in 113.50. It was very nice because this green candle, it actually looks like it's gonna touch 114, even break out this 100 hours moving average. Then it came Donald Trump's comment to completely drop dollar yen. So we are in a sort of nasty drawdown, but of course that's why we have a stop loss. The thing is that when I trade personally, I always trade with a reaction for the crowd, right? So whenever we have a fundamental economic release that is scheduled, those are the things you can come up with different scenario to trade. But if you ask me, how do we prevent this kind of movement? The truth is we can't, because there's so much uncertainty in the market from this kind of sudden events. So really, there's nothing you can prevent it. Even if you are a technical trader, maybe you got in with a nice bullish candle. It's just there is very, very few. You can always say that, of course, you can ride the trend. But what I'm trying to say is that it's very few method to prevent the uncertainty aside from having a stop loss. And that's really the thing you have to adopt as a trader. Because for me personally, I always back then like to control a lot of things. I like to feel like I'm in control. And sometimes that's really jeopardize your own psychology. Because the first thing as a trader or anybody you have to realize in life is that virtually you don't really have much control. And that's why you always have a prevention plan. You always have a plan B, plan C. You always have to be able to react to life, because you cannot control life. So same thing in trading. You have to react to the market events instead of control that events, because certainly nobody can control what Donald Trump is going to say tomorrow. But you have to be able to adapt and react to that. That's a much better solution for you as a trader, is to be quick to adapt, be quick to react, instead of wanting to control the market, because you really don't have that ability, or anybody. So there's nothing I can do really about it. I really was very surprised that his comment basically saying that, okay, Germany, China, and Japan are basically manipulated currency, which is really nothing new. He has said that before. But again, the market react the way they want to react. So we almost got stop out because we are really right. Our stop loss is right at here. We just 4 pips apart basically. So now we are back here. I do expect, if you're just looking at the chart, dollar yen might be keep going down. But then again, right now the market is highly sensitive. It's hard to trade because tomorrow Federal Reserve might give you a positive picture, or even Donald Trump himself might give you a better executive order. Because mind you, he actually had an executive order about regulation. He has saying that if we now one regulation, we need to remove 2 regulation. And as you know, less regulation is always more positive for the market, a free capital market, capitalist market. However, the market completely ignored that event because people pay more attention to the immigration ban right now. That's where we had the protest right now. So that's why the market decided to shift their focus on. And that, of course, create another panic movement right now. So I don't know where the dollar yen is going to go. If you're looking at the chart, yes, it might keep going down. But if you're looking at daily chart, we are still in a sort of uptrend. Today we did break 11250, but we did not close below it. So that just shows you it's a quite strong support at 11250. You are still above 200-day moving average. So it's really depend on how you want to look at this picture, and depend on your time frame. Whenever you hear traders say, okay, this thing is gonna go down, this thing is gonna go up, you have to ask yourself what are their time frame, because people have different way to hold their trade, and that really depends on your psychological analysis. So for me, I don't know where it's gonna go. I'm still holding my dollar yen trade. Of course, I'm in a quite, not a good drawdown right now, but I will see what happens later on for dollar yen. But the only thing I'll say is that if this 4-hour candle close as this strong bullish movement, and if you are flat, this is actually not a bad signal to buy it, because providing if you think this movement is highly irrational. But again, the market can always go very irrational for as long as they want. But just this will be my trade. If I'm not in dollar yen right now, I would wait for this 4-hour candle to close, which is gonna close in another hour, and I will basically, if it's still a bullish engulfing, I will long here and put stop loss here, and maybe ride it all the way up to 11425, where we have the 100-day and 200-day moving average here, which will be a strong resistance, and then get out, which will be a good trade for me personally. But because I'm already in, so I cannot increase my percentage anymore, I will just ride it. Of course, I got it at very not a good level, obviously. So, but that's just my recommendation. But of course, take it into your own risk analysis, because this thing might keep going down, and the things that nobody know. Another trade we got out is dollar yen. New Zealand yen. This, of course, is a good management for me personally. I got out basically not because the chart. I got out because I was in dollar yen already, so I don't want to have the overexposure on my Japanese yen. And of course, that was a good call, because if I'm still in, it's not because the drawdown, because my stop loss is way low here, but I will be overexposed in Japanese yen. And if the risk sentiment continue to be off, which it might be, because tomorrow you have a FOMC meeting, which is gonna be a volatile event, then I will be really nasty overexposure. So happy I managed it well, and that's sitting down for this one. I also took a very short Euro pound trade today. Really not, just a couple pips. I got in at the risk event when the European data was positive deviation. But of course, I got in at not a very good level, because I realized that I got in at high. Like basically, if you're looking at the daily pivot, I really got in at the end of the range. So I soon realized that, and then wait for a few pips to go up. I just got out. So it's just about 10 pips, 20 pips only. Nothing really in particular. Of course, my biggest loss is the dollar yen daily trade. So as I mentioned, I was a little bit overexposed in dollar yen because I actually got in more than 1%. I got 1.5% on my plate. Originally, I got in with daily candle in this one. Last week, we have a little bit green candle, and then over the weekend, dollar completely shift, become very negative currency from Monday, and then today, which stop us out at here. So that's basically the picture right now, and it looks like it's gonna be February 1st. So I'm basically again did a little bit recap for this month, and that's what I always do. I do encourage other traders to do that. Always have sort of review for your month. It's not only to look at how much money you make or lose, but it's really to see what you have learned from your trading. And if you have learned something, that is very encouraging, because you will always have a losing month and winning month. But understand, if you're in this game long enough, and every month, if you, no matter what you win or lose, you can always learn something, then imagine in a single year, you can always learn 12 things. Providing if you only learn one thing, of course you're gonna learn more than a month. But if you only learn one thing, then every year you're gonna learn 12 things, and I think that's very, very valuable. More valuable than money as a trader. It's like always do a sort of monthly review to see what you have learned. Now, for me personally, this month is very, very interesting. As mentioned, I took 2016, the whole year last year, to basically learn this kind of fundamental trading, a new approach, and really things start to get a little bit certain for this year. I'm now still trying to combine it with a better execution technically. So this month, of course, is quite interesting for me. Definitely learn a lot of things about myself and how to manage my trade well. Definitely made tons of mistakes. That's just the nature of trading. And then I'll just continue improve myself. So that's basically my recap. I think perhaps the biggest thing I learned is that the analysis is very important, but your execution is even more important. And that execution is not only the technical execution. That execution is your risk management execution. It's your psychological execution. So you can always analyze the market in a very accurate way. But how are you going to make money from that? Or how are you going to execute your trade? How are you going to control the risk and also address your own psychological effect? That's really what makes you a trader. Because if you go to any website, Forex Live, you go to Forex Factory, you even go to Bloomberg, everybody on those websites are fantastic analysts. They always give you a great analysis. Yet it doesn't mean they are all great traders, right? Because it's as I mentioned, you can always have a great idea, but the execution of that idea is very, very important. So for me, that's what I learned, because I've realized my approach fundamentally had been very accurate and had been quite nice for me personally to realize that. However, my execution needs to improve a little bit. I need to improve my risk management and definitely improve my psychological element. So that's what I learned for this month. And hopefully in February, we can all improve and become a better trader. Okay, so let's take a look at our 28 currencies. Just give me 1 second. Okay, right here. So Euro, again, as I mentioned, fundamentally or sentimentally, Euro is very attractive. So today, like I said, I'm glad I got out, because I actually got out basically at the high of the day. And if you look at the technical chart, it might have a retracement tomorrow, especially the British UK Parliament is currently debating for that bill right now. So that might provide a new catalyst. Euro Swiss, a huge, nice green candle. But the thing about that is, because Swiss franc is sort of a safe haven currency in the current safe haven situation, it's not something I'm looking to buy. Euro dollar, on the other hand, is fantastic. You have this red kangaroo tail, and I was hoping this area to hold, and that did not happen. So today it's quite significant if you see that the market actually able to basically, let's see, from the beginning of December, we never really be able to, actually from here, from November 14, which if I remember correctly was right after the election. So we were never really able to close above 1.07, 66 or 70. Today we close above. So it's quite significant candle for first of all, but also you actually close above this. So it just shows you how strong or how weak US dollar is for now. So definitely you do have this 1.09 resistance here. And that's why I say if I want to do any dollar trade pairs, I'm not going to do any daily trade. So for me to looking at this, I will more interesting to maybe trade in the London session. And if I trade in the London session, basically what I do is I go to hourly chart and I'll see if I have any signal here in hourly trade, providing if we are still within the range of the daily pivot. So if we are basically, way above here, then it's not something I'm interested to take because we're so close to the high of the daily range. But if we are here or even more below, that would be a great to take a euro dollar trade. So that's my plan to trade this. Euro Aussie also have a pretty good run up, but it's not something I take right now because Euro and Aussie are not particularly weak or strong for now. Euro CAD on the other hand is same thing. CAD and Euro are both strong. Euro New Z. Actually this is the trade I was in. I got out already. I forgot to mention that. I got off this trade today because of the Euro strength. So I got out, I think at right here in basically a 3-bar exit, and this one is finished. Though yeah, that's it. Really nothing to mention about it. And Euro Yen, same thing. British Pound, as I mentioned, kind of neutral currency, so I'm not looking to take any trade at this moment. Cable CAD, Pound CAD, Pound New Z, and Pound Yen. Pound Yen, you do have this kind of nice kangaroo tail hammer, but again, I will maybe trade it in a intraday perspective. The thing about Japanese yen is that it really are very sentimental right now. So it depends on how the European market opens, depend on if we have any fresh catalyst to support Pound Yen. If we don't, then it's not something. Let me take a look at hourly chart. So it's really dependent. I guess it depends on what happened. Because you're still looking at more like a downward movement, right? So it's depending on what happened to the European session. But in terms of fundamentally speaking, it's not something I'm interested to take anyway. Swiss yen, dollar Swiss, as you can see, you dropped below this 200-day moving average. So if you say shorting dollar Swiss is even more negative than dollar yen, because dollar yen you are still not only above the 200-day moving average, you are above 11250. You actually close above it. So dollar yen has more strength than dollar Swiss. Dollar Swiss is looking very, very negative. So what's gonna happen is if dollar continues to be weak, you might go down and give you a last kiss on this 200-day moving average. Then yes, you can consider to sell, but once again, I'm not looking to do a daily trade for dollar Swiss. So in that case, I will go to an intraday trade to trade it. Aussie Swiss, again the down day for Australian dollar due to the risk of sentiment. Aussie CAD, Aussie New Z. Aussie New Z actually went up today, just right now, because of the New Zealand negative employment data. However, that alone does not make me have the conviction to sell New Zealand, buy Aussie, because I do think fundamentally speaking, New Zealand actually had a better strength than Australian dollar. So this might be a short-lived sentimental movement. I'm actually looking to short Aussie New Zealand if we can climb up to 1.0475. But as for now, I'm gonna leave as it is because they both are many, like there's no catalyst basic to drive each currency. Aussie yen, on the other hand, again depending on the sentiment of European market. But it's hard to trade a sentiment, as I keep mentioning, because sentiment can shift just like that. So it's better to have a more fundamental picture. So let's keep going. CAD Swiss and CAD Yen. And basically New Zealand Swiss, you can see it dropped very significantly. New Zealand dollar also dropped. New Zealand CAD and New Zealand Yen. Now for me, it's really not a big. This again, that's the one that we got out. For me, this is not really a fundamental play, right? This is really the sentiment. Okay, so the play right now, the only thing I have is euro dollar. I'm looking to long it, maybe in the London session later on, if we have a sort of a nice daily range, a nice hourly signal to get in. Otherwise, I don't have. I'm not gonna get into it because dollar, especially in the afternoon, you're gonna have FOMC meeting. So be careful for any price action. And other than that, unfortunately, whether you like it or not, right now you do have to pay more attention to Donald Trump because his action or his comment actually does affect the market more than what I expected. So, especially if you are in any sort of a shorter time frame trade, or if you are any kind of dollar trade, you really have to be careful. And that's something I realized it. All right, I didn't. Last week was the first week of his office. Market was okay, but now it's just getting more and more volatile. So we'll have to see what happens tomorrow. As I keep mentioned, there's an FOMC meeting, so be really, really careful with any trade. Basically, don't get caught up in the nasty drawdown, like what I am right now, which a dollar yen drawdown. So I have to wait to see how this trade pan out. Again, as mentioned, if right after 4 hours you are still with this. Oh, sorry, this is pound yen. So if after 4 hours you still have a strong, this kind of strong bullish candlestick, you could get in this trade. But maybe you know what? Maybe you can do it a euro yen trade because that might be a better choice. You still have this kind of sentiment movement, but it's much stronger for the sentiment for euro versus yen. But the only thing about it is, let me see what's the daily range. For me to judge whether a currency is a bit irrational, when I say irrational, it doesn't mean it's gonna be rational or doesn't mean it's crazy. It just means that it's more likely to have a retracement. So for euro, the daily range is about 115 pips. Today the high is so basically 110 pips, and if we from this is weekend, January 29th all the way. If you see this movement from 1, 2, 3, 12 minus the low of 12102, that's 210 pips. So yeah, that's really a significant movement. That's outside. It's 2 times of the daily range already. So it does look like it might due for a retracement. So I rephrase what I say. If you want to buy back, maybe euro yen will be a much better choice for you to get into it. If you want to do this kind of a post-risk event trade, okay, you can still do dollar yen because dollar yen does have a better room to go up to touch 11425. So it's really depending on yourself. But basically, that's the plan for now. I am not gonna do euro yen obviously because I'm already in a Japanese yen trade, so I really pretty much cannot take any more Japanese yen trade. But if you are flat, then Euro yen might be better to take in this, providing if we can close as a bullish candlesticks. You could trade 4 hour and to see if you can break above this moving average to even go higher, because euro is quite strong right now. If you want to do dollar, that's fine too. It really depends on your own choice. So that's pretty much it for now. I will wrap up here, and tomorrow the REITs events again. Let me recap. The REITs events tomorrow is, I know the biggest one is FOMC meeting, but during the London session, you once again will have a lot of data from Europe, which generally speaking, those data are quite in line. If they are in line or even slightly positive, will continue to support euro dollar. And 4:30, you will have manufacturer PMI, which is tradable, but really only if you have a large miss, because manufacturer is not a huge sector for British pound. For Friday's service PMI will be a much better catalyst to trade, but you can still trade manufacturer PMI for sure. And then at 8:15, you will have non-farm employment change. This one, of course, will be a tradable event for US dollar if you have a negative deviation or positive deviation. And again, for all the deviation, please go to my weekly outlook. I have all the sheet there. Then you will have ISM manufacturer PMI, which also is tradable for US dollar, crude oil inventory, and then finally afternoon you will have FOMC statement. So a quiet dollar play for tomorrow, and then you have Australian. These two events, it's not really tradable, but take a look at it. So that's what happened tomorrow. Again, be careful for the afternoon. And other than that, I hope you have a wonderful trading day, and happy January. Welcome to February, and hope we can all learn something from last month and continue applying to this February. Okay, thanks for watching. I will see you tomorrow. Thanks. Bye-bye.